In today's video, I'm going to share with you two main reasons why you should not keep your money in the bank this year, and I'm also going to show you what you need to do instead. So you want to stick up to the very end of this video so you can learn more. Hello guys, welcome back to the channel. If you are new here, my name is Eva Mtali and this is Eva Mtali Finance, your #1 YouTube channel for all things making money, mostly online, side hustling, as well as passive income opportunities. So if any of those topics sound exciting to you, you want to make sure that you are subscribed to the channel, and once you have done so, please remember to also hit the notification bell on the right hand side of the subscribe button so that every single time I shoot a new video, you do not miss out. Without much further ado, let's dive into today's video where we are going to talk about why you should not keep your money in the bank and what you should do instead. First of all, when I say you should not keep your money in the bank, I don't mean like run to the banks today and take away all your money. I am talking about this extra money that you are not using. And the kind of money that I would encourage you to keep in the bank is just your emergency money. This is money that you keep aside in case of unexpected happenings. And there is a general rule that I personally subscribe to. That is, I calculate how much I spend every month, multiply that by 6, and make sure that I always have at least that amount of money set aside in a current account, such that anytime I have an emergency, I can always reach out to it. If you're struggling with coming up with an emergency fund that is more than 6 months long, you can start with 1 month and then keep pushing it to 2 months, 3 months, and you keep just building up your fund. The second category of money that I personally keep in the bank is my operational money. So this is money that I use on my day-to-day life, like to buy for food, to pay for my electricity bill, to pay for my water bill, buy my internet and stuff like that. So that is money you can keep in the bank. But the one that I'm talking about that you should not keep in the bank is any other money outside of those two. And here's the reason why. So there is something I recently learned about monetary policy, which applies in most countries in the world, including my country, Kenya. So there's something called fractional reserve banking. So this is whereby, for example, if you go and deposit 1,000 shillings with your bank, the bank by policy or by mandate is only required to have 10% of that money in the event that you need it, like now. So let's say I have deposited 1,000 with, let's say, Absa Bank or Cooperative Bank or whatever bank you're banking with, and you need your money. The bank is only obligated to have 100 shillings of your amount. So the other 90%, they're free to do with it whatever they want to do until a later date, for example. But the money that they are mandated to give you on demand is just 10%, and this is by policy, and it's a policy that is applied by most countries around the world. So what does that mean? It means that in the unfortunate event like what happened, I think in 2015 here in Kenya, remember when Chase Bank, which is currently called SBM Bank, went under, is because everyone rushed to the bank and they all wanted their money now. But banks are not mandated to have all their money now. So because of this policy that I've talked about, fractional reserve banking. So the question comes, where then does the 900 shillings go? So I deposited 1,000, but the bank is only mandated to have 100 shillings now. So where does the 900 shillings go? So this is what happens. You may have noticed here and there you receive messages. Hey, do you know that you qualify for a salary advance? Do you know you qualify for mortgage banking? Do you know you qualify for this and this loan? So this extra money that the bank is not mandated to provide to you on demand, the bank loans it as an interest to other people who do not have money. So let's say your friend needs to buy a house and the house costs 1 million shillings and they only have 200,000 Kenya shillings. So they will go to the bank and the bank will give them the 800 million at a fee of the 800,000 Kenya shillings, but at a fee. And remember, the bank doesn't have any other business it does other than keeping your money. So they are gonna loan this money at, maybe currently the interest rates in Kenya are 15%. So they are gonna give you money to your friend, 800,000 from your account, from B's account, from C's account, and from D's account. They will collect it together and give it to your friend to buy a house. And your friend will be giving back the money with interest at 15%, which is the current rate in Kenya, for example. And remember, you have saved this money in a savings account and you're hoping to get an interest. Last time I checked, the highest interest you're getting from any of these banks, especially in Kenya, is like 5%. So remember, the bank is going to give you 5% for keeping your money with them, but they are going to charge your friend 15% for borrowing your money. Yeah, so that's the number one reason. Fractional reserve banking. The bank is taking your money and making it work for them. You may as well just take your money and make it work for you, because they're clearly not serving your interest. They are charging 15%. They're giving you only 5%. Yeah. The number two reason why you should not keep your money in the bank is because of inflation. Guys, what is inflation? So let's say the same 1,000 shillings, you saved it in the bank so you could use it maybe, I don't know, in 2 years' time, or when you have a rainy day. Currently, the price of bread is 50 shillings. So that means this 1,000 shillings today can buy you 20 loaves of bread, and you have kept it in the bank. The bank is giving you an interest of, let's say, 5%. So after, let's say, 1 year, you want your money back because you need to buy bread for the month, and you go to buy bread, the price of bread is now 60 shillings. So that means you can no longer buy the 20 loaves of bread, but you can only buy about 16 loaves of bread. Yeah, so that is what it's called inflation. It's the decrease in your purchasing power. And the unfortunate bit is that the banks will never pay you interest that is higher than the inflation rate. So that means your money is not working for you. So it's losing value by sitting in the bank. So which begs the question, if I should not keep my money in the bank, then what do I need to do with it? As I already hinted, make your money work for you instead of just keeping it in the bank. And there are different methods that you can use to make your money work for you. So number one, you can invest in money market funds. So these are short-term, low-risk investments that you can buy, and there's different companies, for example, in Kenya that provide money market funds. And if you want me to give an in-depth video on money market funds and how you can invest in them and where you can find some of them, let me know in the comments section below. But you can check with any of the insurance companies. I know, for example, Jubilee Insurance has a money market fund, Britam has money market fund, CIC has a money market fund, there is Saiton Investments, there is ICA Lion, there's quite a number of them. Let me know in the comment section below if you want me to do a dedicated video. Number two way you can make your money work for you instead of keeping it in the bank is by buying stocks. Yeah, so for example, this is on the, let's say if you're based in Kenya, you can buy in the Nairobi Stock Exchange. If you're based in the US, you can buy in the New York Stock Exchange, for example. So right now, for example, there, as much as most of the share prices really dropped and most of the company values really dropped, there are some companies that actually really rose up during the pandemic. An example is telecommunication companies. We're talking about Safaricom, for example, which is one of the most profitable companies East Central Africa. And currently their shares are about 40 shillings a share. You can invest in that, and the advantage is that you are able to get both dividends, as well as you can sell your shares and benefit from capital gains at a higher price. As usual, make sure you do your due diligence before you invest in any stock, in any stocks on the stock exchange. Do your homework, study the books, find out the trends of the company. How is their borrowing? How is their management? How are things? Read the newspapers, find out if there's anything to worry about. Yeah? Number three way that you can invest your money instead of keeping it in the bank and making it work for you is to start a side hustle or start a business. There are lots of business that you can start with as little as 1,000 shillings. I have shared a couple of those businesses on this particular channel. You can check. I'm going to link them up here. And an example, you can consider businesses that do not require so much of your time. Number 4 way you can use your money instead of keeping it in the bank is to invest in yourself. And by investing in yourself, you can either upgrade your equipment. If let's say you are a YouTuber like Eva, you can invest in a better phone, better camera, better ring light, better studio or whatever. And you can also consider taking up some skills. So for example, instead of just focusing on certification, invest in a marketable skill, a skill that you can sell. So right now, for example, world over, there is a shortage of data scientists. You can consider in taking up a course in data science, which is going to be helpful to you. Or if you prefer manual things, you can invest in something like take a course in plumbing, for example, or take a course in catering or cake decorating. And then you can immediately start selling your skills for money. Last but not least, you can consider investing in real estate. Right now, I know there are companies that are selling 3-bedroom apartments, master and suite, for as little as 29,000 US dollars. That's 2.9 million shillings. Very reputable companies. Do your due diligence. I'm sure you can find something. You can also consider building your own rental properties, and you don't have to build some really expensive ones. Right now, low-end houses are really selling like hotcakes. You can build rental mabati houses in a smaller town outside of Nairobi, for example, in Nakuru, in Kericho, and the like, and fetch as high as 3,000 shillings per house. And if you have like 10 units, that's 30,000 Kenya shillings. So guys, the opportunities are endless. Feel free to explore. Well guys, that's it for today in terms of why you should not keep your money in the bank and what to do with the money instead. As usual, if you found this video helpful, please remember to give it a like, leave a sweet comment below, and share it with all other people that might also find it useful. Thank you for staying up to the very end of this video. I definitely look forward to meeting you on the next one. Bye guys.